I've seen in certain segments, certain sectors that people, investors, business operators, owners, in some respect, have been sitting on the sidelines waiting for the election to see what the heck's going to happen because there's all the uncertainty keeps people just kind of paralyzed. And then when something's finally certain, whichever way it goes, it's like, okay, now I can make plans, whatever those plans are. Have you seen any of that happen?
Yeah, I'm involved in a handful of different masterminds and investor groups and stuff like that, and they've seen a ton of commitments to deals and writing checks and M&A and that sort of thing. I listened to your recording of like the post-election evaluation, so I think you and I are going to disagree a little bit here. First of all, like when it comes to deficit, I just realized this the other day, so maybe a lot of your listeners are smarter than me, but when you're running a 7% deficit, essentially what that means is the US Treasury has to continue to issue more bonds, right? And so as there's more and more of these bonds being issued, well, that's the increase in supply. So the demand's not really necessarily changing, but the supply is changing. So what does that mean? Means you have to create more interest, like offer higher interest rate terms to get people to pay for these. Well, the US government competes with private borrowers. So that means that interest rates are going to go up across the board. Like the higher the deficit, the higher the interest rates stay. And I just never really thought about that. And it's like, man, until we get this deficit under wraps, like it's going to be really hard to get lower interest rates because I would have thought interest rates would have come back down a long time ago, like a year ago, like they said they were. Like we thought this was going to go like real up high and real down low. Now, that being said, I don't know how much that's going to negatively affect real estate because real estate hasn't decreased. Like I thought for sure the price of real estate would decrease in direct correlation with the interest rates, and it didn't. And the reason is because lack of supply, but also money supply. I mean, the money supply has just gone crazy. And I know that you referenced the Reagan era where they cut a lot of government programs and then we tightened our belt. And that I think eventually led to a big recession or pullback. And I 100% see that being a possibility. But I also can't reconcile where all this money on the sidelines is going to go. If you've got hundreds of millions or even billions of dollars in dry powder waiting on the sidelines right now because the money's got to be somewhere, like we printed it, how much can the price of an asset fall before it becomes a good deal and you just get back in? It seems like that's always going to be the safety net, the amount of money that's just kind of sitting on the sidelines right now. Now, all that to say, we still are internally cautious about it. I mean, you don't want to even lose 20%, yet alone if it's higher than that. And so that was kind of one of the reasons why we picked healthcare in general to go after because it's got such a good risk return profile.
Yeah. Yeah.
There's VC groups and even like multifamily groups, they've got IRRs in the high 30s, right? Or high 20s even. But there's a risk associated with that. We kind of shoot for that stable 18% across the board. The way we finance and financially engineer our deals is that solid 18%. And if you've got a good healthcare group, I mean, the SBA says that dental has the lowest default rate among like almost all of the different types of industries that they track. So it's very safe. And so we kind of thought about that at the beginning, like when me and my partner started working together. At the time, it was recession resistant, but now we've realized it's pandemic resistant, it's inflation resistant. And then you combine that with like, a national retailer who's got great credit, really strong financials. If they're going to pay the rent, if they're corporate guaranteeing the lease, then you're mitigating the risk as much as you possibly can. And you've still got a building.
Yeah. No, I don't disagree. I will always say, in terms of how I look at my investment, particularly in the cash flows, which is what I like, whether it's a business, a dental office, dental business, and or the real estate. I don't really care what the interest rates are. I care what is the sustainable, predictable income. And now I look and see what the financing makes sense, right? At some point, if the financing doesn't make sense, then values will come down. But I'm not saying that they don't come down in all sectors. The other thing to keep in mind, I think, as we look at interest rates and demand is that there's a risk premium. And you mentioned risk. So if interest rates go a little bit higher or stay higher for longer, as they say, which I think they will. But again, there's going to be some volatility. There's going to be some ebb and flow. I think the thing is investors are going to say, well, if I can get 5% on a short-term treasury, and again, I know you're offering a much higher return, which makes sense. But if I'm looking at other nominal returns on other investments, I've got to get a higher risk premium based on what I can get with no risk, which is basically treasury bills at say 5%, or wherever the number is. It's a little bit below 5 right now, but that's what people look at. So the risk premium in the marketplace today, not just in real estate, but like in against corporate bonds, high yield, used to be called junk bonds, that risk premium is really tight today. There's not much of a spread. And what that speaks to is that there's a lot of complacency, a lot of exuberance in the marketplace, and kind of everybody, and that's kind of alluding back to the Trump mandate, is everybody feels good. And I'm not saying that's a bad thing. I want optimism in this country. I want this country to feel good. And I think that's why Trump won, because they got sick and tired of the other side just playing everything down, saying you're all victims. And here we're going to give you handouts because you poor people, you can't buy a home. And people are like, that's not really what we want here in this country. We just want a chance. And I think Trump gives that chance until we have optimism, which I'm a huge fan of. I think we just have to keep that in mind as we look forward. So I don't think you and I disagree philosophically on what we do, because as I said, I don't really care what interest rates are. If you show me a product or an asset class that produces a certain amount of income, and I think that's sustainable, like you said, dental, that's kind of like a walled garden. It's very sustainable. Healthcare in general is, I mean, we have to have healthcare. So let's just say you put a building with good healthcare operation on it. That's pretty darn good if you do all the vetting that I know you guys do. Then, yeah, now the risk premium, if I'm shooting up somewhere in the mid teens, I'm going, okay, then that makes sense. I'm willing to take a little bit higher risk. How much risk is it? Well, I get to know you guys, what you do, your track record, go, that maybe helps me mitigate some of that risk. So that's my quick take on what you said. Does that fall in line with you?
Yeah, yeah, no, that does. And like, I think we always got to kind of keep our optimism at bay a little bit by being prepared about the downside. But I think that's also a little bit what's happening a little bit differently now than like 2008 per se, because not a lot of people were talking about the downside in 2008, you know, and I think see a lot of people cautious right now, and they have been.
Do you see people cautious right now? I'm curious. I mean, I'd be interested. I don't see it. I don't see people cautious at all. I see people just piling on to everything. I think there's lack of it, but
Yeah, I mean, I guess, you know, I'm only speaking anecdotally. Like, I see memes on Twitter and stuff like that where people pointing to the stock market like a lot and saying like, "Oh, Warren Buffett is sitting on all this cash," right? And so like that's what I mean is like he's pulled out, and so people are kind of pointing to that sort of thing and saying like, "Be careful."
I think smart, sophisticated people who have been through cycles, yes, they are. I just think I see the majority of people, even if they've been through cycles, are going, forget that. It's a new day, you know? So, no, I'm with you. You have to put some caution out there. I agree.
Yeah, yeah, exactly. And look, I'm fully vested in everything, public equities and real estate,
Hmm.
and I mean, I'm bullish long term on real estate. Yeah, it would really be painful for me. You know, if this were to, we'd lose a lot of money if we were to have like a real recession. So I do have a dog in the fight, but also like there's obviously different levels, right? That you can be conservatively bullish. So with real estate, like right now, interest rates are 7%, meaning that we're probably going to have to come up with 35% for the down payment to meet their debt service coverage ratios. So, you know, we're only leveraging 65%. And when you put that kind of money down, like, you know, you're not going to have to foreclose, right, on that type of thing or like sell your personal assets. So I think that always keeping an eye to the downside, that's kind of what I mean by, you know, cautiously optimistic.